This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on June 17th, 2016. Our time is 8:44 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a radio show, there are other ways you can find us. And one of them on Harold's websites, HESradio.com, rarecoloreddiamonds.com. The shows are there streaming live for you anytime. We have a podcast through iTunes. Type in the World Financial Report on Radio. We're also on TuneIn, and we have our own page on YouTube. You'll never miss a show. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week. It is a beautiful pink argyle, a 0.39 carat emerald cut, fancy, intense pink argyle. We'll talk more in the second half of the show about the argyle pink tender. Also, a diamond that was found over in Botswana could sell for 90 million Canadian, 70 million US, 90 million Canadian at the end of the month. We'll talk about that and review the first 6 months of auctions and the colored diamonds that did so well in that first 6 months. As we tape our show, what a week it was. As I was saying to Harold, a shooting in Orlando, a nightclub down there, domestic terrorism, just shocking and horrifying, just very, very, very sad. Also, the Brexit in Britain, a campaign underway. Will the Brits vote to stay in the EU or leave? And then yesterday, an MP, a rising star, they called her, Jo Cox, was shot and killed as she was campaigning for Britain to stay. The vote is Thursday, June 23rd. The campaigning has been suspended at this point due to her murder, and we will see where things go. At this point in time, it's, as Harold was saying to me off air, the staying is actually losing to leaving by about 4 or 5 points. So I guess we'll have to wait and see what happens. It will be a close vote, no doubt. The Fed met. They did not raise interest rates in the United States with Brexit and poor jobs numbers a few weeks ago. They didn't take the chance. And maybe they're going to raise rates one time this year. They had promised 4 times. They raised them at the end of 2015, promised 4 this year. And Janet Yellen did admit when she spoke afterwards, it looks like low interest rates could be here for much, much longer than expected. In fact, this could be the new normal. Gold hit on the dovish Fed and the Brexit, $1,300. There are experts saying gold could hit $1,400 if the EU obviously separates from Britain. In the United States, U.S. dollar was down on the dovishness of the Fed. Canadian dollar up a little bit. Volatility in the stock markets around the world waiting for the Brexit vote. And you can see it, Harold. You and I talked about this during the week. The German 10-year bond, a negative yield. So if you're buying a German 10-year bond, you are paying them to house your money, and a lot of it has to do with all the turmoil around the world. But just imagine, I could maybe see 2 or 5 years, but 10 years, you are locked into a negative rate of return. Absolutely stunning.
It certainly is, and again, makes absolutely no sense. Why would anybody make that investment? So you're right, Randy. The markets are crazy. They're volatile. They're confusing. Thursday, the gold market was up substantially. It was up over the 1,300 level, actually hit 1,318 intraday, and all of a sudden, the market started to fall, and in a matter of maybe 2 or 3 minutes, gold went from $1,318 all the way down to $1,280. That's how volatile these markets are. That's why I've always said, be careful trading these markets. If you don't know what you're doing and trading the futures markets, they're very heavily leveraged, and if the markets can go against you, you can lose more money than you actually put into the marketplace. So please be careful. Don't, get excited about a market and not know how to trade it, because gold is very heavily leveraged. So is silver in the futures market. And if you don't know what you're doing, you could easily lose your money. A lot of people are getting long the gold market, but Thursday was a great indication as to why you really have to be able to manage risk and understand what's happening in the markets, because they can change very, very quickly. Again, from trading over 1,300 to 1,318 and looking extremely bullish, and 5 minutes later is trading at 1,280. That was almost a $40 drop in a matter of just a few minutes. So, again, a lot of it has to do with Brexit, which means the British exit from the European Union, the European community. So, again, right now it's very difficult to tell. The Chancellor wants to stay involved with the European Union, but others don't. And the fact is that there will be a decision on June the 23rd, I believe it is. But even a decision, let's say, to leave the Union or leave the European Union, what would happen is that can't happen for a couple of years. So in all reality, nothing should happen in the marketplace, but the market will react in a big way, whether it's for or against. And again, we'll certainly be on top of it and let you know what the repercussions are going to be. But all in all, is it going to affect the U.S. and Canadian markets? Not really. Britain, or London, is the sixth largest trading partner with the United States. So it's not going to be a massive consequence. So again, initially the news will affect the markets on a very short-term basis, but when traders realize that nothing can happen for a couple of years, I think it'll take a lot of steam out of the actual move. Is it possible prior to the vote that if people get an indication that the vote is going to be for them to leave, for Britain to leave, then I see a rally, a very short-term rally in the market that could take gold up to 1380. 1380 is a very important number for gold. If gold closed 2 days above 1380 in a row, it would signal that the market's on its way to 1450 to 1500. But again, at this particular point, fundamentally, there's nothing very strong in the marketplace that should move gold up, except for, again, speculation in fairly lightly traded markets at this point. I tend to put a lot of my decision-making in the gold market and in the commodity markets as to which way the commercial traders are going. When the banks are in the market, the chances are is that trade is going to work out for them. They very, very seldom ever lose. I've seen that the commercial traders like the banks, like J.P. Morgan, have had huge positions in the market, over the last 15, 16 years. We've been in the biggest bull market in gold that's ever been seen. Don't forget, back in 2000, the price of gold was trading at $250. It went as high as $1,900. It was the biggest bull market of all time. And then again, most people that listen to the show know that the reason that gold fell from 1,900 all the way down to 1,100 was actually made to happen. It was that the exchanges where gold is traded, which is the same as where Wall Street, where stocks are traded, but the New York Mercantile Exchange, for example, or the Chicago Mercantile Exchange, where gold is traded, what they did is they raised the margin requirements 5 times in 1 week. They made it so expensive for traders to trade in gold that they had to liquidate their positions. And they liquidated in such a huge fashion that gold fell from $1,900 all the way down to $1,100 in just a very short period of time, in less than a month. So again, that was made to happen. Gold was on a bull market that should have taken it well above $2,000 to maybe $3,000. But again, gold at that level is a signal that the economy is not recovering. And again, that's when the government stepped in and did what they did. So they actually controlled and manipulated the gold market all the way from 1,900 down to 1,100. Now the market is starting to rally again. Are there shortages in the gold market? I don't think so, because in all reality, over the last 3 years, the gold market has been in a downward move. It's been in a bearish cycle. So basically, a lot of the mines were not producing gold. In fact, the price of gold at that level was not productive, and and profitable for the mines to mine gold. So that's why at this point here I don't believe that there's a shortage of gold. What I do believe is that they're looking for a way for this market to rally, but the fact is that these commercial positions that are in the market tell me that no matter what they do, and I've seen them do this many, many times before, that they'll let the market rally. They'll let news into the market that's bullish, and that will bring speculators into the market, people that shouldn't be in the market, people that feel that they're missing the move in gold, and then they're going to jump in with both feet because they think that they're missing something, that now gold's going to go to $2,000, $3,000, $4,000. Where I do believe that that's going to happen over the longer term, I don't believe it's going to happen over the short term because of the short position in the market. So again, we'll see the way this plays out, but from my experience, doesn't matter what the market is doing. When they get ready to short this market, when they're ready to drop the market, it will happen over a long weekend when nobody's around. And again, they'll start the market selling off, and then it'll hit the New York market. And next thing you know, gold's down $100 or $200. So again, just let the markets dictate to us what it wants to do. But again, there's other things that we need to watch in order to make the right decision. So as we're taping the show, gold is below 1,300. It did trade above 1,300 on Thursday. Silver's trading about 1,753. Platinum market has dropped off substantially. It's trading down below 1,000 at 975. Palladium is at 537. And then you've got the oil market, which has been heading higher, actually went to above the $50 level, hit 51.5, almost $52. And then yesterday on Thursday, because we're taping the show on Friday, the market fell out of bed. It dropped over $2, and the market's down right now to about the $46 level. So again, there's a lot of volatility in the markets, and I'm not recommending that anybody that is not experienced to trade these markets at this particular point. Again, don't get lulled into a false sense of security. Don't be looking for fast money in these markets. You know, when times are difficult as they are right now, a lot of businesses are not doing well. A lot of businesses are closing down. Look what's happening with Sports Authority. They're closing all of their stores. The retail business in the U.S. are really going south. So the economy overall in the United States is not overly great, but it is better than most other economies. That's why the U.S. dollar is still a strong currency. It's trading at 95 cents. Again, the market did fall in the American dollar this week due to the fact that the Fed did not raise interest rates. If the Fed had raised interest rates, gold would have dropped substantially and the U.S. dollar would have gone to about 96 to 97 cents initially. And I do still feel that the U.S. dollar is the strongest currency and will move substantially higher. But don't forget, we're also moving into a very slow summertime period when things really slow down. A lot of the traders are on vacation, and a lot of people are just not paying a lot of attention to the markets. We do, though. We pay attention to the markets every single minute that they're open. I've never, ever missed a radio show. In all of the years that we've been on CHED, for the last basically 17 years, we have never missed a radio show, nor will we, because clients and listeners depend on the information that we give in order to make the right decision. So, again, during the summer, the show will be on every single week. You can listen to us. You can call me at any time, depending on what you want to know and what your financial situations are. I'll be happy to sit down with you and talk to you at any time. You know, with interest rates at 1% or lower, and the stock markets and commodity markets as volatile as they are, it's extremely difficult to make money. Most people that call are extremely concerned about what to do with their money. You know, the fact is that if you've got cash but it's not making you anything, people feel that their money is not working for them. The way that I look at investments is the first and foremost is protection of your capital. It's called capital preservation. You only go into the trades where the loss potential is not gigantic. And then number two, you look for capital appreciation. Obviously, an investment that's going to go up in value. Well, those are few and far between. The fact is that trading in the markets today is extremely risky. 90% of the people that do lose their money. My clients, on the other hand, we trade in alternative assets. We trade in assets outside of the banking system and outside of the markets. We don't trade bonds. We don't trade stocks. We do give advice on commodities, but we don't trade them. We buy and hold gold and silver. Those are the recommendations that we make. But the bottom line is that I have private investments. that my Canadian clients invest in with me as partners. And our clients over the last 2 to 3 years have been making over 25% a year. I know that sounds like a ridiculous return, but it is true. So the fact is that if you're not making 25% or more in a year, which most people are not, you need to get in touch with me, and I'm going to explain to you how we do it. If it's comfortable for you and you want to be involved, you could partner up with us in some of these deals that we're doing that are in the rough diamond market. So if that's of interest to you, get in touch with us, and we'll explain what it is and see if it's right for you. If not, again, it's extremely difficult to make money in today's marketplace. Keeping your money in the bank at 1% just doesn't do it. It's going to take you forever to double your money, and take into consideration inflation is moving slightly higher. Again, it's very, very hard for most people to make money. Fortunately, I've been in this business for going on 35 years, and we've done very, very well in the markets. We've called the biggest bull markets of all time on this particular radio show. So, again, if making 25% a year or more is of interest to you, give us a call, and we'll explain how we do that. If not, again, we certainly appreciate you listening to the show.
The call is free, and the conversation is confidential. Speak with Harold, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week, and you can see it under featured diamonds, and that is at rarecoloreddiamonds.com, is a 0.39 carat emerald cut fancy intense pink argyle. We'll talk about argyle pink diamonds in the second half of the show. Also, there's a diamond that could sell for up to 90 million Canadian. We'll talk more about that in the second half of the show. There are a lot of people that are very, very concerned about what's happening in the financial markets. And Bank of America is saying that investors are now holding the biggest cash pile since 2001. As world gloom deepens, investors have amassed their largest cash pile and cut equity holdings to 4-year lows, rattled by worries over Brexit and policymakers' ability to boost a very fragile economic situation around the world. And Bank of America Merrill Lynch survey said on Tuesday, even though world bond yields have never been lower and an increasing array of bank deposit rates around the world are now negative, investors are willing to hold more cash in their portfolios than at any time since November 2001. Risk appetite fell to its lowest level in 4 years, consistent with recession, although growth and profit expectations hit a 6-month high and inflation expectations a 1-year high. Bank of America Global Fund Manager survey showed global sentiment remains weak. Global asset allocators are holding the highest level of cash balance since November 2001. And as we said, equity allocations 4-year lows. And they're not the only ones that are actually getting out of U.S. assets. China is dumping more than treasuries as U.S. stocks join the fire sale. For the past years, China has been selling treasuries, and it's been a large amount. In fact, they've burned through about 20% of their war chest, and they've dumped about $250 billion of government debt in the United States and using the funds to support the yuan and stem capital outflows. Well, China's sales of treasuries have slowed. Its holdings of U.S. equities are now showing steep declines. The nation's stash of American stocks sank below $126 billion, or 38%, from the end of July through March to $201 billion. One of the other, and this is really a warning, and I definitely agree with what is being said, and that is we really have to be aware of the bond markets around the world. As we were saying, you have negative yields in Sweden. You have negative yields in Switzerland. Now the German 10-year bond is negative. And here's why the collapse in global bond yields could cause a $1 trillion financial nightmare. Worries about a massive crisis in the global bond market are really starting to grow. Last week, a note from Goldman Sachs warned that even a relative small upward movement in U.S. Treasury yields, meaning interest rates, could spark as much as a $1 trillion loss around the world. And Bill Gross, and we talked about this on the last show, he called the huge pile of sovereign debt trading in negative territory a supernova that will explode one day. And Harold, that is something that people need to be aware of. If you're investing today, there are so many different landmines out there. That's why the service that you provide, obviously allowing people to give you a free call, 1-800-432-1022, find out about the different programs that you have. And it's so important now more than ever. I was talking to some different people during the week about investing in GICs. And the top GIC, I think, you can get is about 1.5 or 1.65%. But as Harold has said to us, really, at the end of the day, after inflation, and if you're paying tax on it, you're in a negative position. Using the rule of 72, it would take over 30 years for your money to double, or even at 1%, 70 years for your money to double. That's why you need to speak with Harold. Find out what the programs are in place that he has, what your comfort level is for the risk, and definitely look at investing in a different way, because we're in a time now where things are completely different. And that was one of the things we talked about on the last show, Harold. John Malden saying, we really have to think the unthinkable when it comes to our portfolio, because we're in unprecedented time. We have about 2 minutes left in our segment here.
Well, we are in unprecedented times, because the fact is that, retirees and the seniors that want to retire one day depend on safe investments that will give them an income. And normally that would be based on higher interest rates, putting your money in the CD or that type of thing. That's not going to happen anymore. Most people will never be able to retire. We're going to have to work forever. Where you mentioned that at present interest rates, it takes 30 years for somebody to double their money. In my investments, my clients double their money in 4 years. So the fact is that when it comes to retirement, due to the fact that interest rates are so low and the stock market is so risky, most people can never retire. So again, I certainly understand the changes in the overall marketplace, and that was as a result of 2008. Obviously, what happened prior to 2008 led up to 2008 with the mortgage debacle and the banks going under and insurance companies and Chrysler and General Motors and all that stuff. And believe me, all of that is still on the record books and still money owed. So, there's a lot of danger out there. Most people have no clue what to do at this particular point because they haven't been faced with a situation like this. That's why we're offering at this point to sit down and speak to you, any of our listeners to the show, and try to help you as far as understanding how you can move forward and what you can do with your money.
Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com. John Embry, Sprout Asset Management, a quote, "What may not be well understood by a lot of people are the implications of a sharp drop in the price of stocks, bonds, and real estate, all of which are currently experiencing historic bubbles. They're also comprise the vast majority of assets in pension plans. Many pensions are already seriously underfunded, and a collapse in prices of their primary assets would be catastrophic. Any precedent observer recently would know the most endangered species is the pensioner, and I totally agree." Speak with Harold. Don't be endangered. 1-800-432-1022, rarecoloreddiamonds.com. Going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June the 17th, 2016. Our time is 9:12 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. And if you want to connect with us, obviously you can through multiple sources. You can pick up the phone. Harold has an open invitation for you to call him. He'll be happy to speak with you personally and privately. Call is free, 1-800-432-1022, or connect with him through the website, rarecoloreddiamonds.com. We have our radio show on CHED. If you ever miss a radio show, they're archived on Herald's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on radio. We're going on your portable device anywhere you do. And as well, we're on TuneIn, and we have our own page on YouTube. So we're there for you. And connect with Harold. Get our free weekly newsletter as well. The companion to our radio show. You can go through it and be up to date in about 5 to 10 minutes. Or you can spend hours if you want. Send out via email free of charge every week if you'd like to get it. 1-800-432-1022. You'll be on the same page that Harold and I are on when we do our radio program. One of the things we wanted to mention is Happy Father's Day. Yes, the radio show running on Sunday, Father's Day. So happy Father's Day to all the dads out there, and that includes Harold. Our featured diamond of the week, and this is an absolutely gorgeous pink argyle, a 0.39 carat emerald cut, fancy, intense pink argyle. See it online, rarecoloreddiamonds.com. Featured diamond of the week. One of the big stories coming out this week, the world's largest diamond found in 100 years could fetch over $70 million US. A now famous 3-billion-year-old diamond the size of a tennis ball found by Canada's Lucara Diamond Company last year could fetch more than 70 million or 90 million Canadian when it goes under the hammer at Sotheby's at the end of the month, June 29. The giant 1100, it was originally 1111, now they say 1109 carat rock, known as Lasita Lorona, or Our Light, and that is in the Tswana language spoken in Botswana, was unearthed in November at Lucara's Karowe mine. The diamond will go on display at Sotheby's in London this week, ahead of the 29th auction. And Lasita Lorona is a Type 2A diamond, the largest discovered in 100 years, and second in size only to the Cullinan diamond in the British Crown Jewels. And Harold, we'll let you get your commentary and then do a review of the first 6 months in the colored diamond world and some of the incredible auction results and some of the big diamonds that sold. But that monster diamond, just imagine, 70 million, 90 million Canadian. What an incredible price.
You better believe it. And it's a Type 2A, which is very, very rare. Only 0.001% of white diamonds are Type 2A, which means that there's no nitrogen in it. So it's basically a perfectly clear diamond. So if it's a D flawless Type 2A, which it more than likely will be, especially to command that type of price, means that you can see directly through the diamond. It's absolutely amazing. So I have a 100 carat D flawless Type 2A diamond put away for my kid's future, and it's pretty outstanding. So I've seen them. Most jewelers have never seen a diamond that's a Type 2A or even a D flawless type of thing. So again, these diamonds take on a life of their own, and just judging by the auction results for the last month, you're seeing where the big money is being invested. The big money is in diamonds. There's no doubt about it. Blue diamonds have skyrocketed in price in the last 10 years. They've gone from vivid blues of very high quality, have gone from $200,000 a carat to over $4 million a carat. We're seeing pink diamonds skyrocketing in price as the Argyle mine is getting set to close in about 3 years. And then on top of that, green diamonds, which we just started talking to you about, are starting to set records also. In actual fact, a vivid green diamond last week sold for over $3 million a carat. So what's happening in the diamond market is unprecedented, and there's a good reason for it. The same reason as we talked about at the beginning of the show. Interest rates are below 1%. Stock markets and commodity markets are extremely risky. And the fact is that rare colored diamonds or very rare diamonds hold their value. We talked about capital preservation. A diamond like that will never, ever go down in value. So there you've got capital preservation and the opportunity for longer-term capital appreciation, where over time the prices of these diamonds can skyrocket in price. And that's what we're continuing to recommend and continuing to work with. So we are mining now extremely rare, rough and uncut pink, green, and orange diamonds, amongst the rarest that you've ever seen. And at times we allow our clients to partner up on us with some of these parcels, and some of the returns have just been absolutely phenomenal. So if that's of interest to you, give me a call and I'll certainly let you know how you can participate in the purchase of parcels of rough, uncut, colored diamonds. And I got to tell you, they're really, really spectacular. So again, Randy, I couldn't be more proud and more pleased with what's happening in the diamond market, especially in light of what's happening in all the other financial markets. They're risky, they're volatile, they're uncertain. Again, 1% interest rates, it'll take you over 30 years to double your money. Just very, very difficult to make money in any of the markets today. Most retirement savings plans are doing horrible. I speak to clients every day, and for the last 10 years or more, nobody's making money in their retirement savings plans, which totally defeats the purpose of doing them. And the fact is, it's only going to be tougher and tougher and tougher to make money in stocks and mutual funds. Give me an opportunity. I've called some amazing markets over my career, and I believe that the best is yet to come. I think we have a very firm handle on what's happening in the marketplace and what are good returns for our clients. So, again, the diamond market is on fire, and will continue to do so, especially with currency problems, the fact that Britain could be out of the European Union. It's an unbelievable time, so confusing for most people. Again, if you're confused and you want to know what you can do, no matter what amount of money you have, again, it'd be more than my pleasure to try to help you. To Randy and I, our Canadian clients and listeners to our radio show, are everything to us. We will do anything to try to help. And again, it doesn't matter what your financial situation is, whether you're not strong financially or whether you are, give me a call and let me explain to you what we're doing. Our clients are doing much better than the norm.
See this Argyle diamond online at rarecoloreddiamonds.com. It's like going to a museum online and seeing the world's most beautiful investment diamonds. Featured diamond of the week is a 0.39 carat emerald cut, fancy, intense pink Argyle. Now, one of the things that I did this week is take a little tour back in time, and I revisited what happened in the first 6 months of the year when it came to, and these are the big monster auction results. And we know that we have lots of other auction results with smaller diamonds for lower prices, but usually those are the ones that really do much better than even the big monster diamonds. In fact, this week we have from Christie's Magnificent Jewels and the Cullinan Dream Sale, June 9, we have auction results. If you'd like to get them, all you need to do is connect with Harold, 1-800-432-1022, or connect with him at rarecoloreddiamonds.com. But let's go back to April the 5th. And like I said, it was an amazing first 6 months of the year for diamonds. The De Beers Blue Diamond, and it was sold in Asia, and it was the De Beers Millennium Jewel 4, sold for $31.8 million in Hong Kong, setting at that time a record for the highest price ever paid for a jewel at auction in Asia. The oval cut 10.10 carat fancy vivid blue internally flawless gem went for $3.2 million per carat, according to Sotheby's. Now we move ahead a little bit to, and this would have been in a little bit later in May. There was a 15-carat vivid pink diamond. It sold for $31.5 million. It was called the Unique Pink. 15.38 carat fancy vivid pink diamond sold for $31.5 million, $2 million per carat, at Sotheby's sale of Magnificent Jewels and Noble Jewels in Geneva, setting a record for a stone of its type. It's the largest pear-shaped fancy vivid diamond ever to come to auction, It was sold by phone to a private Asian buyer, according to a source who requested anonymity. So there you have it. Obviously, a big pink going. Now, the next day, we had what would turn out to be probably the story of the year. The most expensive jewel ever auctioned, the Oppenheimer Blue. Diamond sold for a history-making $58 million. The 14.62 carat Oppenheimer Blue, the largest fancy vivid blue diamond ever offered at auction, set a world auction record, selling for $58 million, including commissions and fees. The rectangular-shaped gem with the highest estimate of $46.1 million was a lead item at Christie's Geneva Magnificent Jewels sale. It managed to beat the 12.3 carat, and this is the Blue Moon of Josephine, which sold for a record $48.4 million in November of 2015. Its hammer price of approximately $51.3 million easily topped the Blue Moon. And then, as Harold was touching on, a little later in the month of May, we moved on to the Aurora Green. The Aurora Green diamond sells for a record price of $16.8 million. 5-carat Aurora Green diamond set 2 world records for green diamonds at Christie's Hong Kong Magnificent Jewels sale, selling for $16.8 million. The rectangular cut fancy vivid diamond sold for more than $3.3 million per carat. The green diamond was VS2 clarity, mounted on a gold ring surrounded by circular cut pink diamonds, and it was a beauty. Purchased by Hong Kong-based Chow Tai Fook Jewelry, one of the largest jewelry retailers in the world. Its price was obviously simply off the charts. The diamond shattered the previous record for a green diamond, which was set earlier in the month for the Ocean Dream, a 5.5 carat, and this was a fancy vivid blue-green diamond that sold for $8.6 million, $1.5 million per carat. Now, last week, it all culminates. I know people are saying, wow, there's so many of them. And this is why we've been saying this has been an outstanding 2016 for colored diamonds. 24 carat Cullinan Dream, and this is a blue diamond, sold for $25.3 million last week. The latest statement blue diamond to set a mark at auction this season, the Cullinan Dream, which became the largest and most expensive fancy intense blue diamond ever sold at auction, achieved $25.3 million last Thursday, and the size of it, a 24.18 carat corner rectangular mixed cut gem, was the top item at Christie's New York Magnificent Jewel sale. Its price was obviously very, very, very impressive. But Harold, as I list off all those monster diamonds, you have to admit, what an incredible, so far, and we still have the fall season to come, what an incredible 6 months it's been for colored diamonds, off the charts.
You better believe it. Those are just unbelievable. Good work, Randy. That's really good work, and very, very important that everybody knows what these diamonds are actually returning. So understand this. Obviously, most people cannot afford $25 million diamonds. It's a very, very small marketplace, but it seems that almost every single auction, these diamonds are being sold. However, also within the auction results are auctions for diamonds that are not $25 and $30 million diamonds, diamonds that are $100,000 diamonds and less. And those diamonds have done tremendously well also. In actual fact, yellow diamonds have set records at almost every single auction. Blue diamonds are doing it. Green diamonds are. It's just an amazing time. And again, these are not short-term investments. You don't buy a diamond and sell it in a couple of years. It's not going to have enough time to really get up into those high values. What you need to do is put it away for a longer period of time. That's why diamonds do so well. A diamond that sold for $25 million could have been bought 30, 40 years ago for, 10% of that amount of money. So in most cases, a lot of these diamonds came from rough diamonds that were cut and polished, and that's how the first diamond was actually purchased. So it's just a very exciting time, and those numbers just speak for themselves. And we anticipate that not only will it continue, but the prices will continue to get higher and higher. Just look at what the art market has done and look what the collectible car market has done. There's no reason that diamonds will not do the same thing. So, again, Randy, it's just been a godsend. We're extremely pleased with the results, and we're excited as to how well our clients are going to do in the future.
And you take a look at the scarcity of the pink market. We know that in about 2020, that's when the Argyle mine in Western Australia will shut down. No new mines coming on. 90 to 95% of the world's pinks will be done. They may have some pinks in the vaults for a few years. Argyle will have that. But once they have their tenders, that is it. The world's pink diamonds are all in the secondary market. And we know that Harold has positioned his clients to take advantage of that scarcity situation of this investment. And that's why a featured diamond like today's, a .39 carat emerald cut fancy intense pink Argyle, is definitely worth speaking to Harold about. See it. Featured diamond of the week, rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. Speak with Harold personally and privately, 1-800-432-1022, 1-800-432-1022. And last week, we had news that came out. Rio Tinto unveiled their lead gems for the 2016 Pink Tender. Rio Tinto revealed 5 highlights of this year's tender of polished colored diamonds from its Argyle mine as the company kicked off the sales process with a preview in Copenhagen. The centerpiece of the 2016 Argyle Pink Diamonds tender is the Argyle Violet, an oval, and it's 2.83 carat violet diamond, and the mine in Western Australia, known for its colors, has only produced 12 carats of polished violet diamonds for the tender in 32 years. Harold, somebody is going to get that diamond and be so pleased. I know that you have actually seen violet diamonds and have had some in your possession.
I do. I own some in my private collection, and some of my clients own them. So they're extremely rare. Obviously, that diamond is going to be the highlight of the Argyle tender. But then there's 3 red diamonds that are also coming out in the tender, which are extremely rare. And it's just a great time to be in diamonds. And again, this will never, ever happen again. There's no mine in existence that ever did what the Argyle mine did, which was produce 95% of a given colored diamond like pink diamonds. So once that mine is gone, which will be in about 3 years, you're going to find that the price of pink diamonds could increase substantially. So we've been buying Argyle pinks now for the last decade. The fact is, the closer we come to the end of the mine, just like the Argyle tender, the last 2 to 3 years in the Argyle tender, the prices have reached such high levels that most dealers cannot afford to buy them. In actual fact, once they let the general public start to invest in these Argyle tender diamonds, which is the biggest diamond event of the year, what happened is that the prices just went ballistic. And now the quality of the diamonds coming out of the mine are declining. There's a lot of I-1 clarities, means you can see the flaws with your visible eyes, and those are selling at records. So it's just an unbelievable time. We think that the Argyle diamond market is just going to be one of the biggest payoffs of all time for our clients. So there's still time to get in. The prices are still reasonable enough, and the featured diamond, you'll just be able to tell by looking at the featured diamond. It's spectacular. An emerald cut, intense pink diamond of that size is extremely rare, and that particular diamond will make some lucky investor an awful lot of money.
0.39 carat emerald cut fancy intense pink Argyle. See it. rarecoloreddiamonds.com, featured diamond of the week. Speak to Harold about the investment opportunity there. 1-800-432-1022, 1-800-432-1022. And we have the time. Let's go through a few auction results. Christie's Magnificent Jewels and the Cullinan Dream Sale from last week, June 9, 2016, New York, Rockefeller Plaza. And, of course, we had the big blue diamond going for $25.3 million, the Cullinan Dream. But let's take a look at some of the other diamonds. And they were very impressive. Lot 123, a colored diamond and diamond ring, set with a cut-cornered rectangular mixed cut fancy intense yellow diamond weighing approximately 12.13 carats. The estimate on it was $125,000. It sold for $245,000. Lot 223, a colored diamond and diamond ring from Harry Winston, set with a rectangular cut fancy intense pink diamond, weighing approximately 0.98 carats. And the estimate on it, $100,000, went for $203,000. Lot 116, colored diamond and diamond ring, set with a round, brilliant cut, fancy intense yellow diamond, weighing approximately 5.61 carats. The estimate on it, $100,000. It went for $185,000. Lot 24, a diamond and colored diamond line bracelet. And what made this very special, Harold, this was a gift to Elizabeth Taylor from Michael Jackson. And the estimate on it was $80,000. It went for $100,000, but it should be noted that this had been previously sold at Christie's in New York, the Elizabeth Taylor collection, on December 14th, 2011. And it was lot 274 at that time. And obviously the person, even though they had it a short period of time, did get a little bit of a profit. Lot 158, a colored diamond and diamond ring by Bulgari, set with a cut-cornered rectangular modified brilliant cut fancy yellow diamond, and the weight on that 6 carats. The estimate on it, $70,000, sold for $87,500. Lot 187, a colored diamond and diamond ring, set with a hard modified brilliant cut fancy intense purplish pink diamond, weighing 0.5 carats, and it was an absolute beauty. The estimate, $25,000, sold for $30,000. And lot 85, a pair of colored diamond and diamond earring pendants, and each set with cut-cornered rectangular modified brilliant cut fancy intense yellow diamonds. The estimate on it, and they weighed approximately 1.67 to 1.54 carats. The estimate on it, $20,000, went for $25,000. So, Harold, overall, some very, very nice auction results last week at Christie's Magnificent Jewels and Cullinan Dream Sale. I did get a chance to watch online the auction, and when the big Cullinan Dream came up, it was interesting to see how the bidding went. And somebody has gotten a beautiful blue diamond that if they hang on to it for a long period of time, I think they'll do very, very well.
You better believe it. Blue diamonds have just done better than any investment out there over the last 10 or 15 years. Just very, very amazed as to the prices that they're getting, and they're so difficult to get. Even small blue diamonds are extremely difficult to get. So, again, just very pleased with the results. It shows that, we did a lot of work researching this market over a decade ago to make certain that it was a safe and profitable market, and again, we're just very happy with the way it's going. Now, as far as my companies go, we built the secondary market to resell our clients' diamonds down the road. Is called H Siegel Fine Auctions. It's the only company of its kind. It's a virtual live auction. And what we've done is we've changed the technology, so now you're able to attend our auctions on your iPhone. And that took a little while to do, but it's looking phenomenal. And we are going to start to do auctions again in the fall, and we're going to have them often. And they're not only going to be for diamonds, they're going to be for other items also. So we're going to have a lot of fun with our auction business. Well, we built that for our clients to be able to resell their diamonds. And again, we're very pleased with the way that business is going to grow and everything that's happening. So again, just couldn't be happier with the diamond market at this point, and I intend on putting a lot of money and a lot of time into our businesses this year and next year to grow it, not only in Canada and the U.S., but all over the world. So I think our future looks very, very bright.
Our featured diamond of the week, a 0.39 carat emerald cut fancy intense pink argyle. Featured diamond of the week. And it's a 0.39 carat emerald cut fancy intense pink argyle. See it rarecoloreddiamonds.com, or speak with Harold 1-800-432-1022. Well, you have a candidate running in the United States, and he's running for president, and he's talking about making America great again. Then on the other side of the hand, you got people who say the United States is already great. But it was interesting. This week, I found this quote, and I wanted to read it to you quickly before the end of the show because it just stunned me. The number of Chicagoans murdered this year is up more than 50%. Pension debt tops $20 billion, and taxes are soaring. The Illinois governor called the city's government corrupt and its financially teetering schools crumbling prisons. That was from Bloomberg. I don't know, Harold. With about 30 seconds left, it's a crazy, crazy time in the world financially and geopolitically.
You better believe it. It was such a sad week, obviously, with what happened in Orlando. And then I know a lot of our Canadian friends found out about a little 2-year-old boy that was dragged into the lake, and that was such a horrible thing. But again, all in all, just our hearts go out to everybody in Orlando, obviously. Just an absolutely terrible time and everything that happened there. I do want to wish all the fathers out there a very, very happy Father's Day. And I hope you have a great weekend and have a profitable day.
Thank you, Harold. Wish you a happy Father's Day. My father's no longer around, but wish him a happy Father's Day in remembrance. Connect with Harold. Speak with him personally and privately about investing. 1-800-432-1022 or rarecoloreddiamonds.com. Happy Father's Day. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.